As we wrap up the year, a lot of small business owners are focused on just surviving the holiday rush, or maybe just making it to the finish line. But here's the thing, this is one of the most important times to pause, look at your numbers, and make some smart moves that can save you money and set you up for a stronger start next year. A few years ago, I got a call on December 29th from a client. We'll call her Sarah. She owns several dental practices. She was frantic because she was convinced that she'd missed her chance to save money on taxes. It took some serious effort from her and our team, but we were able to find her well over $10,000 in tax savings that she could still capture before year end. The next year, we talked many weeks earlier, and that time, we were able to achieve a successful tax planning strategy without the stress or anyone having to work during their vacation. If you wait like she did, you might miss out. Many CPAs are closed over the Christmas and New Year holiday. Here's the thing, December isn't the end of the year, it's the launch pad for the next one. So are you ready to take off? I'm Mark Tuggle, host of Beyond Your Books, a small business growth podcast and owner of Telos Bookkeeping. And today we're talking about 7 key areas every small business owner should review before year end, plus one bonus area that might matter even more than the rest. So grab a cup of coffee, open your calendar, and let's dive in. Let's start with the one everyone loves to hate, tax planning. Once December 31st passes, your options shrink dramatically. So if you haven't done it yet, now is the time to talk to your CPA or tax advisor about your 2025 tax liability and any moves you can still make before the year closes. Many strategies can only be implemented during the tax year, not after the fact. If you haven't done so already, here are some conversation starters for that meeting. Review year-to-date profit and estimate your tax bill. Confirm with your advisor what, if any, estimated payments you've already made and what might be due for Q4. Ask if it makes sense to accelerate deductible expenses like prepaying rent or supplies or insurance. If you're on a cash basis, discuss whether delaying some income could help. And don't forget about retirement contributions. Those often have big tax advantages. If you have depreciable assets, review Section 179 deductions. And if charitable giving is part of your personal or business plan, explore that now. Here's a pro tip. Don't wait for your CPA to reach out. You start the conversation. And if you don't have a CPA or tax advisor you trust, reach out to me. I've got great relationships with several excellent professionals who understand small business owners and can help you build the right plan. Next, it's time for a financial cleanup. Clean books make for better decisions and fewer headaches. If you have a professional bookkeeper, some of this should already be happening. If you do it yourself or have someone in-house, use this as a checklist. Make sure you've reconciled bank and credit card accounts. Review your accounts receivable and accounts payable. Clean up old invoices or bills. Maybe write off bad debt. Correct any categorization errors or payroll entries. Update loan balances and amortization schedules. Record or review depreciation on fixed assets. I can't tell you how many times I've seen a client's tax prep bill double because their CPA had to fix sloppy books. A cleanup now saves you time, money, and frustration later. And here's something I remind my clients of every year. Your January reports are only as good as your December reconciliations. Start the year with accurate numbers and your business will thank you all year long. Now that your books are in order, let's talk about what they're telling you. What story did your numbers tell this year? Compare your actuals versus your budget, or if you don't have one, against last year. Look for your most and least profitable products or services. Are there areas where you're pouring in effort but not getting return? Don't be the client who discovers that 40% of your sales are coming from a product that produces only 5% of your profit. If that's you, it's time to restructure your pricing, and cash flow will turn around quickly. That's the power of clarity. Think about how your pricing, costs, and cash flow worked this year. If you had some tight moments, ask why. Was it timing or was it structure? Sometimes increasing prices just 3 to 5% in January can make all the difference in the coming year. Remember, your numbers aren't just reports. They're the story of your business. And now let's talk about something owners often overlook. You. How much did you pay yourself this year? Did it line up with your effort and contribution? And did it make sense for taxes? Depending on your entity type, you might need to run an end-of-year payroll for yourself. You might also want to consider bonuses or distributions for yourself and key employees. And please, review your retirement plan. Whether it's a SEP IRA, solo 401k, or something else, these plans can dramatically improve your long-term wealth while lowering your taxable income. Here's a quick reality check. For many small business owners, the business is their retirement plan. That's risky. Start building wealth outside the business too. Future you will thank present you. The fifth area is compliance and entity review. These are the little administrative things that seem small until they become big problems. You want to check business licenses, insurance policies, registrations, things that happen just once a year that maybe you missed or forgot to schedule. Speaking of scheduling, schedule any annual state or local tax filings. Property taxes are always one that sneak up on business owners. You need to collect W-9s from your contractors and prepare for 1099s. Also, review whether your current entity type, LLC, S-Corp, etc., still makes sense for your situation. One business I worked with hadn't updated their entity structure in 10 years. By switching to an S-Corp, they reduced their annual tax burden by over $8,000. Don't assume that set it and forget it applies to your business structure. Revisit it as your business evolves. End-of-year reflection should always turn into next year direction. This is the time to step back and ask, where do I want to be 12 months from now? Set clear, measurable goals. And yes, make them smart, specific, measurable, achievable, relevant, and time-bound. By specific, you got to put some numbers on your goals. Measurable, make sure you can clearly define progress. Achievable, while your goals should stretch you, they should not be pipe dreams. Relevant, ensure your goal is designed to help you achieve your telos, your ultimate goal or purpose. And time-bound, it can't be indefinite, but it doesn't have to just be annual. Think monthly, quarterly, or maybe seasonally if that fits your business model. Then, identify the metrics that matter most, things like revenue, profit margin, or cash reserves. And don't forget to budget for growth, whether that means marketing, hiring, or upgrading your systems. A good rhythm is to schedule a half day early in January just for strategic planning. Block your calendar, step away from the office, and think about what you want the business and your life to be next year. Now, for one of my favorite topics, building long-term value. Even if you never plan to sell your business, it should always be sellable. That means it runs smoothly, generates predictable profit, and doesn't rely too heavily on you. In the Value Builder system we use at Telos, there are 8 key drivers of company value. Things like financial performance, growth potential, recurring revenue, reducing owner dependency. I covered these drivers in detail in Season 1, Episode 2 of this podcast. If you missed it, be sure to check it out. When owners start improving even a few of these drivers, we often see company value jump significantly, sometimes by more than 70% over time. Ask yourself, could my business run without me for 90 days? Is my revenue predictable month to month? Are my customers loyal enough to refer others? If the answer to any of those is no, you've just identified next year's growth goals. And if you'd like to understand your business's value and how to grow it, schedule a value builder assessment with me at Telos Bookkeeping. And finally, a bonus eighth area, one that often gets overlooked: rest, renewal, and reconnection. If you can, take some extended time off this season. Step away from the daily grind, renew your energy, and reconnect with the people who matter most. Your telos, your ultimate purpose, isn't just about running a business. It's about why you're running one. This is a perfect time to reflect on that. Ask yourself, is my business serving my life, or am I serving the business? What would it look like for my work to align more closely with my values next year? Year-end just isn't about closing the books. It's about setting the stage for what's next. And before we wrap up, let me quickly mention 3 common year-end mistakes I see all the time. The first is waiting until January to review your numbers. Second, ignoring cash flow red flags because things will calm down. Third, forgetting to pay yourself or plan for taxes. Avoid those and you're already ahead of the curve. So there you have it, 7 + 1 smart year-end moves for small business owners. But don't just listen, take action. Here's my challenge to you. Before the ball drops on New Year's Eve, pick 2 of these areas and block off time to work on them. It could be tax planning and goal setting, or maybe a financial cleanup and cash flow review. Whatever it is, put it on your calendar and get it done. Because when you start January clear, clean, and confident, the rest of the year will follow that pattern. Thanks for listening to Beyond Your Books. You can download the free year-end business checklist below to help you follow through on what we talked about today. Here's to finishing the year strong and starting the next one with purpose. Thanks for watching. If this episode sparked ideas or brought value to your journey, hit subscribe here for more insights that empower small businesses to thrive with purpose. Dive into more episodes here to keep learning, growing, and making an impact. See you next time.